Starting with a small trading account is challenging, but it's not impossible. Most traders fail because they take excessive risks, trade emotionally, and lack a structured plan. In this video, I'll share a step-by-step approach to help you grow a small account steadily and safely. The biggest mistake traders make is over-leveraging. They risk too much per trade, hoping for quick profits, but when the market moves against them, they wipe out their entire account. The key is risk management. Never risk more than 1 to 2% of your account per trade. For example, if you have $100, your risk should not exceed $1, $2 per trade. It may seem small, but this approach ensures long-term survival. Another essential factor is choosing the right market. Some markets require large capital, while others allow you to trade with a small balance. Forex, crypto, and fractional stocks are great options for small traders. These markets provide high liquidity, low capital requirements, and better flexibility in position sizing. To grow your account, you need a consistent and profitable strategy. You don't need a complicated system with dozens of indicators. Instead, focus on price action, trend trading, support and resistance, and breakout strategies. The key is to trade high-probability setups and avoid random trades. Be patient and wait for the best opportunities. One of the most effective ways to scale a small account is through compounding profits. Instead of withdrawing earnings too soon, reinvest them. If you grow a $100 account to $150s, you can slightly increase your trade size while maintaining proper risk management. Over time, this method accelerates your account growth without exposing you to unnecessary risks. Discipline and emotional control are just as important as strategy. Many traders become greedy after a few wins and start overtrading. Others get scared after a loss and hesitate to take the next trade. Successful trading requires consistency, emotional stability, and patience. Stick to your plan, accept that losses are part of the game, and avoid impulsive decisions. Lastly, always track and review your trades. Keeping a trading journal helps you analyze your mistakes, refine your strategy, and improve over time. Trading is a skill that develops through experience, so continuous learning is crucial. Growing a small account takes time, but with proper risk management, a strong strategy, and discipline, you can achieve consistent progress. If you found this video helpful, don't forget to like, comment, and subscribe for more trading tips.